Ladies and gentlemen, welcome back to the channel. Today, stocks are powering through to a new all-time high. We called it, we were right, and well, I think we're going to see more upside from here. Now, don't be surprised if we see a little bit of consolidation that could start in the beginning of next week or in the later part of next week. But here in this video, I have all of your breaking news you need to know, some comments from Trump, some economic data that came out this morning that was absolutely huge. And, well, there's more talk on trade deals and more talk on AI. And yes, Wall Street is starting to chase this market. Ever since we broke those all-time highs that we previously set on February 29th, 2 days ago now? Yesterday really was the first bigger break. It's a chase. That it is what it is. Either get with it or get left behind. Markets tend to hit all-time highs and then proceed to hit more new all-time highs. This is the start of a larger rally for stocks. Whether you like it or not, it's happening. And I think it's going to continue to happen. I actually have some pretty lofty expectations, as some would put it, of the SPY hitting 700 by the end of this year. Yeah. And there's a lot of reasons to really justify that. First and foremost, we don't have an inflation problem. The economy is doing okay. It's not doing great, but there is a big focus on AI, and AI is leading this this market. This is a new, gold rush, if you will, the AI gold rush. And I think it's really going to broaden out to a lot of different sectors and a lot of different stocks in the next, let's call it, 6 months or so. But I think what Wall Street is really starting to focus on is a new Fed that's going to be coming in around March of 2026. And cumulatively, this year and next year, you're looking at anywhere from 9 to 10 rate cuts as where the markets are currently kind of priced at. Yeah, that's a lot of potential, what I would call upside for stocks in that scenario as borrowing costs come down and presumably the economy gets better. This economy is being restricted, just choked at the neck by interest rates. Okay, the Fed clearly doesn't see that. A lot of other people do. But when rates come down, when people can actually sell their homes and you see more transactions, equity is realized into bank account balances, this economy is going to get better. That's in 2026. At the same time, we're going to be cutting rates and we don't have an inflation problem anymore and a focus on AI and deregulation and the tax bill getting passed. Yeah, I don't think you want to bet against this market. But here in this video, again, I will share with you all of the news you need to know today. Hit that like button and subscribe to the channel if you have not done so already. Check out that link down below in the description of this video. For the trading community, I actually, what I do over there is I spend hours every single day going through smaller cap companies trying to find the opportunity. Apple at one point was a small cap company. Nvidia at one point was a small cap company. Salesforce at one point was a small cap company, okay? These stocks that we look at today as blue chip companies were once small caps a long time ago. I want to find these stocks and opportunities that can grow into much bigger companies, give you that 100x, that 50x, 10x even, right? Those are the opportunities we're looking at, trying to turn $2,000 into $20,000 or $2,000 into $100,000, okay? That would be a 50x versus a, 10x. That's what we're looking for over there, okay? 95% of small caps are garbage. Another 2% of small caps, 3% are okay. And the top 2% of small caps are like big winners. They will be big winners over time. We're looking for that top 5%, specifically that top 2%. It's got to be, they have to be in the right industry, which is AI or biopharma right now. Very selective opportunities as well in other smaller names, but they're far and few between. I disqualify most stocks right off the bat, but some of them we've uncovered as big opportunities, one of which I just purchased today is one of the largest data center providers in China. And the stock recently fell from $15 down to $6. and it has virtually no analyst coverage. The analysts that are covering it are very optimistic on it. And from the work that I have done so far, I mean, even today, the stock was up like 15% right after we bought it. I guess perfect timing, if you will. But they just raised guidance today. They just issued a share repurchasing program. And that's just one of about 5 other stocks that we have recently identified in the last couple of weeks as potential big long-term winners. Come check that out if you guys have not done so already. And let's get into the video. Now, in other news today, Bank of America's HeartNet says the S&P 500 is on the cusp of the 7th great breakout since the 1990s. Bank of America strategist Michael Hartnett observes in his weekly flow show note to clients, observes that, quote, for all the Sturm and Drang, every asset class is blessed by inflows, with U.S. stocks recording $164 billion of inflows and analyzing at the third best rate ever, and Europe with $46 billion on course for its second best annual influx. It says the emphatic outperformance of international stocks compared with those of the U.S. in the first half owed much of the global phenomenon of rate cuts. So basically, because the world was cutting, those markets were outperforming. It says there have been 64 of them so far, on track for the biggest number yet, but the Fed has not yet joined the party. Europe and China are all upping spending significantly, while the U.S. had to contend with tariffs and cuts to government agencies. But these factors are expected to dissipate in the second half, while Congress's tax and spending bill could deliver $90 billion in tax cuts from 2026 onward. This morning, we did have economic data. We got core PCE month over month that came in at 0.2%. The expectation was 0.1%, but if I'm correct here, what the heck is this kitty doing? There's rounding that has to do with this. So I'm not exactly sure what the actual number was. But judging on the market's reaction, it was probably just, a rounding number that took the headline number to 0.2%. Okay. Now, personal income month over month came in at negative 0.4%. The expectation was positive 0.3%. So that's I don't know if that's good or bad. That's obviously good from the inflation fighting perspective. Negative income after years of very strong income gains is very indicative that tariffs are not going to be passed on to consumers, because again, what tariffs tend to do and how they tend to pass inflation on to consumers, if they were going to, which there's no evidence that is happening as of right now, is higher wages, right? You get the first initial burst of higher, maybe prices from tariffs, but it's the follow through from wages. People start to demand more money, and then that's where you get the, secondary effects and higher inflation. Well, the personal income data today suggests that is not happening. And I don't think we are in an economy where you can go to your employer and say, hey, I need a 7% raise or 5% raise because inflation's 2%, and that raises my real wage by 3%. They're going to stare at you and then say, are you serious? And if you say you're serious, then you're probably going to get fired. Okay? Over the next following couple of days. It's not that economy where you can start demanding things from your company. Nonetheless, you also had personal spending month over month that did come in on the weaker side, negative 0.1%. The expectation was positive 0.1%, and the previous month was 0.2%. So a little bit of weakening, what looks like, in the consumer, and I would imagine this is raising the probability of Fed cuts, but so far it's not today. You're holding steady at a 21.4% chance of a July 30th rate cut, 78.6% chance of no cuts at all by July. The percent of stocks trading above their 50-day moving average today coming in at about 71%, so definitely on the stronger side. The AI Investor Sentiment Survey, got a little bit better this week. Bullish investors coming in at 35.1%, neutral investors at 24.7%, and bearish investors at 40.3%. So it got a little bit better, but bearish investors still outpace bullish investors by a little over 5%, and neutral investors really just continue to be elevated there. So, as long as there's more bears than bulls, I think there's plenty of upside in this market. Now, the CNN Fear and Greed Index today coming in at 66. That is almost midpoint of greed. Market momentum is neutral. Stock price strength is greed. Stock price breadth, extreme greed. Put and call options in greed. Market volatility is neutral. Safe haven demand in greed. And junk bond demand is also currently greed. Fed Kashkari today says that he is in line with basically the Fed's dot plot to expect 2 cuts in 2025. And Donald Trump confirmed last night, which is probably part of the reason markets are moving higher today, that the trade deal with China has been signed. Now, Donald Trump today says, I think we'll reach a deal with India. Trump says we want full trade barrier dropping with India. Trump says at a certain point over the next week, we will send out a letter to countries to tell them what they have to pay. Trump on the July 9th trade deadlines says, quote, we made a deal with China and others. And Trump says that he is in the process of making other trade deals. Donald Trump says the problem is the Fed guy, referring to Jerome Powell. As we did talk about in the videos yesterday, I think the markets are going to start to care less about what the Fed is doing this year and focus on what the Fed's going to be doing next year, which is multiple rate cuts. I mean, you could see like 8 to 10 cuts next year with a new Fed chair. I think that's what Wall Street is firmly starting to focus on right now. Trump says that some nations will be disappointed because they will have to pay tariffs. Trump on Iran's nuclear ambitions says that Iran wants to meet. He says that he doesn't believe Iran will go back into nuclear. Trump says it would be great if Powell lowered rates. If Powell lowered the rates, borrowing would be cheaper. And again, Trump says in process of making trade deals, 4 to 5 trade deals have been made. Also in the news today, OPEC Plus is set to weigh another supersized oil output increase. So really what that means is more supply, constant demand, lower prices for oil, which is, I mean, the biggest form of stimulus you could ever give is oil prices falling, like gas prices at the pump falling. There's no bigger economic stimulus than that. U.S. House Speaker Johnson says July 4th tax bill deadline may slip, speaking to reporters. Putin says thanks to Trump, the U.S. and Russia are beginning to align. Putin says that Russia and the U.S. have good economic cooperation prospects. Also in the news today, the EU and the U.S. are confident they'll reach a tariff deal by the July deadline. U.S. Treasury Secretary Bessent says the U.S. isn't going to make socks and towels again. We're looking at high-end precision manufacturing. Bessent says when you close the border, Americans get higher wages. And in the University of Michigan final June consumer sentiment numbers, sentiment rose to 60.7. The estimate was 60.5, so that was a beat. 1-year inflation expectations fell to 5.0%. The estimate was 5.1%, so that was a beat. And 5 to 10-year inflation expectations fell to 4% versus the estimated 4.1%. So inflation expectations down and general, optimism around the economy up slightly. And Doge has entered the ATF with a mandate to slash gun regulations. And traders see September as the start to the Fed rate cuts, but they are adding to bets the Fed will cut 3 times in 2025. And again, it looks like we're betting for, or getting close to betting for, 3 cuts in 2025 and 6 cuts in 2026. But those 6 cuts next year really comes down to just not having an inflation problem, the Fed being behind the curve, and getting Powell out of there in March, getting, a new Fed chair in there that is a little bit more competent, that is more prepared to cut rates. So with all of that said, ladies and gentlemen, let me know your thoughts on this information down below in the comment section. I will tell you, I did buy another under the radar AI stock today for the trading community. This one's interesting. It's actually one of the biggest data center providers in China. A little bit of an Easter egg for you. I'm sure you'll be able to figure it out based on that. And the stock was up a lot today. They actually did a share repurchasing program, and they raised guidance when they already reported earnings. They just did a surprise raise, which is always seen as a good thing. But this stock, yeah, definitely has 5 to 10x potential in this new AI super cycle that I think is coming for our markets, really for 2026. And this is a longer term trade. All of my, under the radar stocks are longer term trades, 6, 12, 18, 24, 36 month kind of trades. And what I'm really doing in that community is spending hours every single day before the markets are open, after the markets are closed, sifting through small caps, trying to find the stocks that are in the right industries. Could be biopharma, could be AI. Lots of those areas are interesting right now, that are in the right areas, that are in growth areas, that are executing. Okay, these are smaller cap names. 98% of them are garbage. 2 to 3% are great, potentially big winners. Another 2% of them are okay. Like 95% of them are dog crap and you should never own them. 5% are pretty good, but 2 to 3% of them have big opportunities ahead of them. Those are the ones, the top 5% are the ones we're trying to find, but really the top 2 to 3% that are the 50x opportunities over the next couple of years. They have to be in the right sector. They have to be executing. They have to be under the radar with not a lot of analyst coverage yet. Those are some of the criteria. And I do that work so you don't have to. So you can potentially be a part of stocks that have big upside with hopefully limited risk profiles attached to them. That's some of the work we're doing as well. So check out that link down below in the description of this video. Come join the Patreon if you guys want to be a part of that action. And nonetheless, that's it. Have a great rest of your day and a new all-time high day. And I will see you in the next one. Say bye-bye. This freaking cat, dude. You don't even know how many times it's ran up and just like climbed my leg during the course of this video. This cat is crazy. Freaking nut job. He kind of looks like a nut job too. His name's Jose. Yeah. You guys have a great day, and I will see you in the next one. So let me know your thoughts on all of this down below in the comment section. Do you think markets are going to continue to rally? Do you think the rally is running out of steam? Are you bearish? Let me know your thoughts down below in the comment section. Have a great rest of your day, and I will see you in the next one.